Hi, I'm Brandon Poe, founder of Poe Group Advisors and creator of the Accounting Practice Academy. You are listening to the Accountant's Flight Plan podcast, where we talk about stuff in the accounting world. If you're looking to buy or sell a practice, we are the premier accounting practice intermediary firm in the industry. Check us out at pogroupadvisors.com. If you're a firm owner looking to build a more profitable practice while actually reducing owner hours, sign up for our practice management workshop, which only runs a few times per year. Learn more at accountingpracticeacademy.com. Welcome to the Accountant's Flight Plan podcast. I am super excited to have Catherine Tindall on our show today. And Catherine has an interesting niche, and I guess a lot of U.S. CPAs are going to be familiar with this somewhat. So just a little bit about her. She is a CPA with a background in corporate and personal tax planning, and a specialty with the employee retention credit. Her firm, Dominion Enterprise Services, works to leverage technology and CPA expertise for precise and credit and income tax planning strategy work. And they also do a lot of work with other CPAs. So Dominion Enterprise Services is a specialty CPA firm. And you guys do, I guess, a lot of interesting specialty type work like IRS resolution, complex incentives, credits like this one. So welcome, Catherine.
Yeah, thanks for having me.
Yeah, I learned about you from another CPA, actually my CPA that does our company's work. And so it was just this interesting conversation because I had a feeling we wouldn't qualify for ERC. And my accountant was looking at our quarterly numbers and said, no, I think you might be. You need to talk to Catherine. And so that's how we met. But before we really get into some of the ERC stuff, and which is a really interesting program, and how did you first? Let's go back to early on. What made you choose to be a CPA?
So it's funny. My parents are both tax professionals, and they have their own firm. So growing up, I experienced tax season every year. I remember when I was a little kid back in the days where there was a lot more paper filing that happened. We'd get in the car and we'd go for the ride over to the post office at midnight on the tax stuff like that. So, I grew up with that. And then I always thought, no, I'm never going to do this. This is super boring. I'm going to cross this off my list as a profession. And initially I wanted to go into medicine. And then it wasn't until I was in college and I had some electives and I started to talk to people in the medical field and realized the deep troubles that are there. And my parents said, you got an elective, take an accounting course. It'll always be something, it's just give it a whirl, see if you like it. And so I took the accounting course, immediately clicked, really liked it. And then too, just from the experience of, I was working in the business world at that point while I was in school and realizing, oh, this is actually a profession where you can have a lot of autonomy, you can have a lot of control, it's very stable. And in particular, what I really enjoy about tax work is you're always in this constant dialogue with the clients. And, half of the job is the technical expertise. And then the other half of the job is really personal and, working with people in their individual situations. And you're having to be the arbiter between them and a very intimidating tax code that they don't understand. And that's, you're having to translate that back to a business owner in a way that they can understand it and alleviate, their fears. Because I think for a lot of people, taxes trigger anger and fear. It's the main things that I experience. And so I really enjoyed kind of almost, a quasi therapy role with getting people, to understand what they needed to do and also act on their best interest, and really getting them into the best positions that we can with, different tax planning techniques that we have. And I think the nice thing too, that's interesting with US tax is that it really interacts with everything in that taxpayer's life. And so you really get to know people personally, in a way that, other kinds of accounting, it's very personal. So that's why I got into tax specifically, and, a little bit of my journey. It's a family thing. So couldn't avoid it.
That's interesting. Yeah. I mean, working with clients is, I think people underestimate just how big a component that can be, especially if you're getting into complex planning. And now, was your career always sort of focused? Did you gravitate toward more of a specialized role within the industry, or did you start out very broadly in your early in your career and go, okay, I don't like this, I don't like that? Like, how did you kind of narrow your focus as your career progressed?
Yeah, so I've been working in accounting, basically since I was in college, and I did a bunch of different roles in private, and I worked for a publicly traded company at one point because I really wanted to have that broad back. Before I went, I knew ultimately that I wanted to have my own tax practice, but before I did that, I wanted to have a really broad background and understand things from the internal side, and then just have a really broad picture of, how this all works. Because one of the things that I've encountered somewhat often is when accountants just pigeonhole into one specialty thing without having a broad expertise on the back of it, with experience in a bunch of different spaces within accounting. It's really easy to miss things. And then especially too on the corporate side, if you don't have any kind of background in corporate accounting before you go into tax, it's actually, you can have a lot of communication gaps with the internal accounting people that you're working with, because you don't understand what they're going through with their month end closes, or how they're tracking things, or what their concerns are, when you're coming just from a tax perspective. So I started with working with a bunch of different companies in internal functions, and then did, kind of the broad public account. Once I was out of college, did the broad public accounting firm thing. Always stayed at a regional level because I wanted more experience in more different things first before really niching down. So I did some audit and tax and, personal and corporate. And, and then once I felt like I was ready, that's when, we started this firm. And then over time, I've just gotten more and more specialized, as I've found things where I've really felt I could add more value through having a deeper expertise in them with some of these specialty programs. And then in particular with like tax planning and a real focus on tax planning, I've found that to be really valuable. But you have to have all those broad skills before you can go into those niche skills. So it's that's been my journey.
That's an interesting observation. One of the things that I've observed in selling firms is that people that have that both public practice experience and also have experience on the other side in private, they tend to have a different perspective, and I think they can relate to the business owner in a different way, in a more effective way often. And what I've also observed is they generally will start some sort of advisory part of their firm. If they own a firm and they've got that broad background, they just naturally gravitate toward more and more advisory. It could be, general business advisory, or it could be some sort of tax planning role. But so that's interesting that how the broad perspective helps with the very narrow perspective. So let's get into how you sort of decided to focus on this ERC, because what I find interesting is it's one of those interesting programs that has a short shelf life. Like, this thing came in as a pandemic related program, which, we have a lot of Canadian listeners on our podcast too. And there were programs everywhere, and we all knew they were short term. So what made you want to dive into something that you knew was only going to last a little while?
I think for me, it started with when these programs came out. The first piece was, my view with my client relationships was always, things that touch my world, I need to make sure that they're aware of these kinds of programs. Because in general, there's a lot of different small programs that are always running, things like the worker opportunity tax credit or tips credits, things like that. And, making sure that, they're probably not going to know about this unless I tell them about this, because how are they going to know? Even though, for a lot of those other incentive programs, we don't deal with them. So, kind of pre-pandemic, that was always my response of just, how's any way that I can help this company save money? And if I see things that look like they're off, like if I see that their workers' comp expense looks crazy, I'm going to say something. So it started with that kind of perspective with the relationships we had. And then when this program in particular came out, and I realized, oh, this is actually impacting a lot of once they changed the rules and made it so that you could do both ERC and PPP, I realized, oh, this is actually impacting a lot of people, and it's such potential high dollar figures here. I need to have some kind of solution for this. Either we're going to do it or I'm going to find somebody else to do it, because this is really potentially material money for these clients. And I can't just say, oh, well, good luck. That wasn't good enough for me.
Yeah.
And so when I started to get into it and reading the guidance and talking to people, I realized pretty quickly that I wasn't finding a good comfort level with a lot of the other people I could see in the space, and to the way that the rules are written, and just how much of a mess the program is. Honestly, it's just a really messy program. Just the way that Congress wrote it, and then the way that the IRS interprets it, it just creates a really complex situation from something that didn't have to be like that, but that's how it is. And so we started.
Was it just put together so quickly, do you think? Was it just, they just rushed and?
Oh yeah.
Yeah.
That's the problem with it. I think it's, so Congress put it together really quickly. They revised it because, they realized people were just going to do PPP and not touch it. But then when they changed that, they didn't really go back through and do a good job of extrapolating things. There was a lot of administrative mess that was left, that we're still left with. A lot of practitioners I talk to, because as you may know, when you file for a tax credit like this, you actually have to go back and amend the corporate and personal income tax returns most of the time. And that's really frustrating for a lot of tax professionals, because it's, okay, now all of a sudden you're triggering a bunch of these amended returns for somebody to try to take advantage of an incentive program that's supposed to be an aid program. But they just put it together way too fast and then handed it over to the IRS for interpretation. And I think the IRS did, on the interpretation side of it, I think they did a pretty good job. They were basically just stuck with, okay, well, we have a bunch of missing pieces here. We have to plug this thing into the tax code. We're going to have to reference the other parts of the tax code in order to fill out these missing pieces. And so it makes for a lot of stupid loopholes and stupid provisions that they basically got stuck with it, because it's like, well, we don't have it. You guys didn't give us a definition of this term or this treatment in the law itself. So now we have to go somewhere else in the tax code to get that. And it's not necessarily going to make sense with the initial intent of the program, which happens a lot. So it's just a very, messy program that was never cleaned up. And then, I think because of a lot of tax professionals who looked at it quickly realized that was the situation for it. And then also the fact that, most tax pros that I talk to, they already have way too much regular work. So to try to take on something like this is, more than they can typically handle. And so it, for us, it just ended up, we did them for our own clients. I'm in a number of planning societies, and people just said, oh, can you help my clients with just getting these done, since you already know how to do these? And we had a background in R&D tax credits before that. So the real piece that's concerning with these is the IRS enforcement and inspection. And we were already comfortable with that, having gone through R&D credit audits of what that was going to look like on the back end. Because that's the real fear with a program like this, is you do an application and then is the IRS going to come back and try to claw funds back? So that was our approach with it.
Interesting. Yeah. And I guess so the program, as of the date of this recording, is still going on. It's like, what's the state of ERC right now? Does it have a sunset provision? Is it going to expire? How would you characterize where we are with it right now?
Yeah, so for 2020 claims, we have until this coming April, so April 2024, to apply for those still. For 2021, that goes until 2025. So we still have another open year, which it's a crazy long statute of limitations on it, just because you file for them on amended payroll tax returns. But that's, it's still open. And then really the big next piece, which I think a lot of tax professionals are going to get pulled into the battle on this one, is people who went to bad providers now getting pulled into inspection, because it's really not until recently the IRS is actually starting to do the inspections on these, and it's only going to ramp up over time. So that's really the next wave of this, and that's going to go on for another 3 to 5 years.
Wow. Why do you think, like, have you seen this before where you get these providers that are, I mean, I've never seen anything like it where you have
Yeah.
these strange providers. I mean, I still get calls like all the time of, do you want to do you want to take advantage of the ERC? I get emails like I get marketed more about this than anything I've gotten, you know, contacted about before. Was this a perfect storm for a bad program?
Oh yeah, absolutely. Because I think a lot of people don't realize that the mechanism by which you file for this is a couple of adjustments on a 941X. And that is just then mailed to the IRS. And as long as the top line information looks like it makes sense, like your EIN matches, the original payroll matches and that sort of thing, they basically just pay them out. There's really no inspection that happens. That's really the level of due diligence. Now, for the really large claims, they sometimes will those ones, they tend to get escrowed. But for a lot of people in the mom and pop kind of situation, if your claim is under, under 100,000 a quarter, the IRS is just they're going to get that return. They say, okay, well, where do we send the check? And that's basically all the level of inspection that's happening. And so that's why there's just this storm of people that are doing these filings, because you don't need to be a licensed tax professional to do that.
Yeah.
A lot of these companies don't even file the payroll tax returns. They just give the numbers back to the business owner to have their payroll provider file for it. So now this provider, their name is showing up nowhere. Or they have just the business owner sign the returns as a self-prepared return. And again, their name shows up nowhere. So there was really very little safeguards put in place for taxpayers with this program, just because of the way that the code is written. There's very little restrictions around who can actually be prepare these kinds of returns. Because, if somebody wanted to, they could self-prepare this. And so there's really very little protection for people other than, talking to your tax professional and using common sense. But on the IRS side, the IRS is not going to provide you really any protection against these kinds of, weird providers that are out there that may or may not be legit.
Were you surprised that happened, or not really? Like, were you surprised at how the IRS behaved, at how far they let it go before they started to try to reel it in? Because they're trying to reel it in a little bit now, right?
Yeah, because they're suspicious that they had a backlog of, I think the last time they reported it was like over 700,000 returns. And they were suspicious that the majority of those were fraudulent claims. They did an announcement like yesterday that was, we just sent out 20,000 notices. We're stepping up enforcement. And then when lower in the news blurb, it was, the notices were issued to people who are applying for ERC who either never had a business existing during the pandemic or had no payroll. So it's like, oh, okay, so have you guys just been paying these out previously? Like, why is this news? But wow. Yeah, there were so many things that they could have changed on the administrative side. I always lament that it would have taken them a week to create a supplemental attachment for the payroll tax returns to say, this is how the client is qualifying. This is the reduction in revenue numbers that we're using, or they're qualifying under a government restriction. And this is some of the, some language about that. And then below that, a little due diligence section that says, I, as the taxpayer, understand that, this is something that I'm applying for and I've followed the rules here. And then also having the paid preparer, have a binding, forced to sign, things like that. It wouldn't have taken very long to put in some of those kinds of safeguards. And then too, now that we're on the back end of this, it's much harder for them to audit because they don't have a lot of data, for people that filed without signing. There's no way for them to trace back who the original provider was unless the taxpayer comes forward. And so if they had something like a supplemental form that got attached to the return, they'd have way more data for audit enforcement. And it would have prevented a lot of bad claims quickly, because they could have automated a lot more of the, the enforcement administration. But it's just, they had too little resources and had to take it on too quickly. And so we've seen that like on the processing side of these two, why the processing delays have been so slow. It's just, they weren't given the proper resources to administrate this correctly. So it's just been a mess.
Yeah. And now think of after people, the money could be gone in most cases, or in many
Oh,
cases.
absolutely. Yeah, and it's a terrible look for them as an organization. Why did you pay these funds out? And then, like, really, are you going to bankrupt these businesses who, and a lot of times, it wasn't they're not tax professionals. A lot of these companies have very flash marketing and, good salespeople. And how are you supposed to know, other than, that it sounds too good to be true, kind of a thing? But a lot of the times in the legitimate cases, they end up being really large figures, and it's totally legitimate. So it's just really hard. It was a really hard one for taxpayers, other than the fact of, the piece of advice that I always gave to anybody that was thinking about doing this is you need to have your tax professional on those phone calls, because they'll be able to tell if it smells bad.
Yeah.
But it's just a perfect storm. Yeah. And
Yeah.
I think it'll be interesting to see what happens the next time we have incentive programs like this, what kind of safeguards get put in, because I think this is definitely going to be a lesson learned. And it'll be interesting to see how they do enforcement, because it's just so many of the problems in the program are coming from a lack of foresight on the, on the IRS side.
Yeah.
If you own a CPA practice, you're no stranger to the grind. It's easy to get so buried in work that you lose sight of the bigger picture. Oftentimes, in order to improve, we need to change our point of view. Accounting Practice Academy by Poe Group Advisors gives you that fresh perspective, so you can achieve success on your terms. This virtual workshop gives you the tools and mindsets to grow your bottom line and make your firm less owner dependent. You'll use your firm's data to zoom out and see your challenges and opportunities with amazing clarity. Most APA members come to realize that pruning their clients and doing less will actually generate more income. Poe Group Advisors has sold hundreds of accounting practices. We know that the firms that are the easiest to operate are also the most valuable ones in the marketplace. APA is the only workshop built from that mergers and acquisitions perspective, which means our members build more valuable practices. Create a better practice for you and your employees to enjoy, or build it to sell. The choice is yours.
Have you looked at your practice the way a buyer would? It's easy to lose sight of the bigger picture when buried in the finer details. With the lessons within our latest book, How to Prepare Your CPA Firm for a Sale, you'll learn to build upon your firm's success and make your firm more enjoyable for you and your staff or a future buyer. Go to pogroupadvisors.com/prepare for your free copy.
I had a friend that he received like $800,000 of a credit, and I don't know who did it for him or how that happened, but it's like, wow, that does sound a little too good to be true. That's a windfall, and yeah, it's when did you start to realize, like, man, this program's getting kind of crazy?
Pretty early on, because we had clients that were being approached, and some of the advertising that I would see, I'd say, they're like, oh, it's $26,000 per employee, and I'm like, that's not how this thing works. That's totally misleading. Like, nobody qualifies for $26,000 per employee, because unless you are maxing out that payroll and you're qualifying for every quarter and you didn't take any PPP and nobody's like owner wages in the business, there's no, you're not getting to that 26. So we started pretty early on realizing the craziness that was going on. And then also, as somebody who does this work and I educate other people on it, I did have some of these like mill-like companies approach us, and, had an initial conversations with some of them. And it was pretty shocking, the level of, telling people this is how this works, and I can show you every citation from the IRS, and then just people, kind of walking off and, well, we're just going to do what we're going to do. And I'm like, okay, good luck. But I think, it's you've got people that got into this who don't have a professional tax background. And so they don't really understand. A lot of them don't really understand the ramifications of, when you do this kind of thing inappropriately, what are the stakes that are really there. And I think that's part of why you got all these marketing companies that got into it, because they just see the dollars. They don't see this is actually a compliance nightmare. And so they just kind of go with it. So not good.
What do you think, like, your average practitioner that doesn't want to get into this, what do they need to know about the program?
So I have another course that's on Earmark that's ERC Essentials for CFOs and Controllers, and that's really aimed at what I think anybody who's going to go anywhere near this program should know. It's about an hour long, but I think the long and short of that is basically what you need to know about this program is most of the problems with it come from eligibility determinations, and where you really need to be skeptical is when people are qualifying under non-revenue declines. So there's two parts of the program, just as like a basic sketch. The first part is just, do you qualify under certain revenue declines on a quarterly basis? And you can look up what those are. If you're interested in like that actual testing, we have resources on our website that provide the information on that. But did the client have quarterly revenue declines? Yes or no, when you compare back to 2019. And if somebody's thinking that they qualify, under not using those provisions and using the government restriction provisions, you have to tread very carefully. Those rules are very specific. You need specific government orders. You want a lot of operational data. You want quantitative data from the client, not just a narrative about how they were disrupted. And you really need to you just need to be very skeptical when somebody's going to try to qualify under those provisions, just because a lot of people get confused with wanting to use just general pandemic disruptions as qualifying, rather than, the real way it's written is you need a government restriction, and that company had to modify their operations as a direct cause from that government restriction, and not just general pandemic chaos. So I think that's the kind of the long and short of what I think any practitioner should know if they have a client approaching them, especially if they say, oh, this company told me I qualify for, 6 quarters under a supply chain disruption. Very suspicious, like 99% chance that's bad.
Yeah.
I'd
So
say those two pieces of it.
So the original intent of the legislation was, hey, if your revenue went down, if you really had, as a business owner, you had a pretty severe negative impact on your revenue, this will help you.
Yeah.
And, or if for some reason you couldn't operate because of a government restriction, we can help you. Is that kind of the basic outline of the intent?
Yeah, the intent behind it was, you suffered either a revenue financial loss for whatever reason, so we're just going to make it a pure financial test.
Yeah.
Or we, us as government agencies restricted your ability to operate. So even if you didn't have those revenue losses, but you were, working really hard to make up for all these restrictions we had, so you have kind of a phantom financial loss there, and you kept your people on payroll and you were paying wages during this period, and you didn't just boot everybody to unemployment, we're going to compensate you for it.
Okay.
Because we wanted to, the original intent was that people were going to take this in real time. And so it was going to prevent employers from saying, hey, you know what, things are getting a little tough. Everybody on the team go on unemployment for 2 months and then come back when things are normal again. That's the behavior they were trying to prevent. Now, with the administration of it, because the delays were so long and the rules were confusing and nobody really could apply in real time with a good conscience because it was just too many unknowns, it just didn't end up working out that way. So now it's kind of a retroactive, IOU from them for that time period. So I don't know if it's really a successful program, to be honest, just because the administration of it was so, backwards.
Yeah. Yeah. I mean, so you got that course. We'll put that in the show notes. So if you go to pogroupadvisors.com and look at our blog, all of our podcasts are displayed on the blog, and we'll put show notes up. So we'll give some links to, I think you provided those links to me, and you got resources on your website for just kind of doing that quick and dirty revenue test, I guess.
Yeah, there's an ability we have some tools that are programmed to kind of help people navigate that quickly, because they changed the rules between the 2 program years. So we've got tools for that. And then that other, it's very, very tried top line, how does the ERC work? Where are the pitfalls? What do you need to know? That piece also has continuing ed attached onto it as well. So you can get some continuing ed for that. But I recommend anybody who's thinking about doing this, spend an hour. You'll get the CPE. We all have to do it anyway for the licenses. So, get that CPE, and then, you'll be educated enough to have these conversations with clients and, keep them from jumping off the cliff with some of these really erroneous, inappropriate claims.
Are the claims, are you seeing just sort of the volume of this decrease? Is it starting to fall off?
It just depends. So I think different organizations are all at different levels of where they could handle this. I think a lot of the bigger organizations, especially if they had bigger CPA firms that were on top of this, have already done the program. But for a lot of the smaller people, it's just been so up in the air. And I think for a lot of, the smaller to mid-size accounting firms, everything's just been really behind, just because of how much difficulty we all had during the pandemic and catching up. And so I'm not seeing too much of a change. The only thing that's really shifting now is on our side of things. We're seeing a lot more people who are now waking up to the fact of, oh, maybe this claim that I had filed was inappropriate, and I should probably have somebody check this out before I spend this money, because if it's not right, I need to pay it back. So we're getting a lot of those people now where they did get the funds. They've seen now all the IRS warnings. Maybe they talked to their tax professional and they didn't do that before, and the tax professional's cautioning them against, just going ahead and spending the money if they're not 100% confident that they really should have it. So we're seeing a lot more of that now. And then I expect within the next 6 months to a year, it's going to be a lot more people reassessing this because of inspections. But
right.
Yeah.
So what are you going to do after this credit is over with? Are you just kind of, have you got another niche that got your eye on, or what's going to happen next for you?
Yeah. So for us, it's like I said, it's going to be like another at least 3 to 5 years of enforcement on the back of this. And really, for a lot of people, they basically need the work redone again, and then they need somebody to basically interface with the IRS for them. So that's going to be that's really what we're starting to do now, is more of that, as well as helping on this inspection side and doing the cleanups and recalculating these credits for the appropriate amounts. So that takes us for another 5 years. But my background's in the income tax planning piece, and I think that's always just going to be kind of the middle of what we do as a firm, and then to some of the other incentive programs that are out there, and working with clients to take advantage of those. So like R&D and cost segregation studies and stuff like that, some of those perennial programs. But it was one of those things where a lot of other tax professionals asked me, like, well, why are you going to bother with this? It's going to time out. And I said, I know, but this is really material money for these business owners, and it's unfair to them to not pursue this. I felt that it was unfair to them to not do a good job with it, just because it was only going to be a one-time thing.
Yeah.
So that was my approach. And just because I wasn't really finding a lot of other practitioners I could get comfortable with.
Yeah.
That's why we started doing them.
So you've got a lot of experience with this, and you've spent many hours studying it, doing it. You talk a little bit about just the value of being in a niche, like not just the efficiencies that come around that specialization, and would you recommend that for practitioners to like niche down, focus? Like, what are the benefits that you've observed firsthand from kind of going really deep into this credit?
Yeah, I would say to any practitioner, you've got to niche down, because that's the only way you're going to make up the operational efficiencies to deal with the fact that we've got some severe labor shortages in our industry. So you're really going to have to leverage technology. The best way you can do that is by being in a niche where you're dealing with similar client profiles all the time. So you're not having to ad hoc do work. So you just have to do that from a survival standpoint. Otherwise, you're just going to have very low margin in your firm and low morale. So I think that's just a necessity. But the benefit of it, other than, improving your margin because you can operate efficiently, is, really take a look at what's the kind of work that you really enjoy doing, and then just become really excellent at that and only do that. So I think for me, part of why we got into this program in particular is I just like the way that these jobs work too. I really like the phone conversation where it's like, hey, you're going to get these checks back for this amount of money. And I like that the jobs go fairly, can go fairly quickly. And that, you can build these systems for high quality control. And it's, I just enjoy the work. I like dealing with all these different people and dealing with the tax professionals, and then having to explain to them a lot of the nuances in this. Like, I just enjoy that kind of relationship. And so I think for other practitioners that I talk to, it's like, what do you enjoy the most out of the work that you do? How can you make that your niche? Is it a particular type of client? Is it a particular type of work? And that the more that you can refine what that is and become excellent at that and really only do that. I think one piece of advice that I got from another tax professional that I really liked is, you really should, there's always more work out there. So that's not really the problem. It's the 80-20 principle of, you should probably be saying no to 80% of the people that come into your door looking for work from you, because it's really the 20% that you serve well, that value you, that you do a good job for, that you should be working with. And that's going to make the clients happy. It's going to make your staff happy. It's going to make you happy. And it'll make your bottom line happy. And that really you should be saying no more than you should be saying yes when people ask, for services. So that's my advice to any tax practitioner. Find something you really love. And just any accountant in general. It's like, if you don't like doing CFO work, why are you doing that, in your firm? Just focus on the things that you do best and just do more of that.
And the more you do, the better you get at it. Like,
exactly.
It's just continual improvement. Because you're, I'm sure, extremely knowledgeable about this program. You've probably got the intake down. You've probably got the processing down. Like, it's probably just all a well-oiled machine, and that's a great client experience. And so good for you.
Yeah, and it's really good for the staff too, because I think that's the hardest thing is, when you, as a partner in a firm, when you take in all these jobs and then it turns into a juggling act for the junior staff that are having to kind of ad hoc figure out what documents you need, or, managing all these different types of engagements. It's just a really hard thing to ask a staff person to do versus, basically these are going to go a similar way almost every time. There's always nuances because each is going to have its own complexities, but for the most part, we know where those nuances go in buckets. And it's more or less predictable how the work is going to get performed. And, you're not going to get pulled in on all these last minute ad hoc projects that just create those really crazy work-life balance, problems, and just a lot of uncertainty and those sorts of things. So
yeah,
that's why I really, I like that, from that perspective as well, is it really helps with that internal morale.
Oh, that's a great point. It's just the process sets you free as the owner, but it also sets everyone free that's involved with it, right?
Yep.
And probably for the client too. I think, when you're dealing with a professional that does a lot of something, you feel it as a client. You feel that, okay, I'm in good hands. There's a process here. It takes a lot of the uncertainty away from the client as well. So
that's true.
I want to jump over to some kind of other questions, just some general questions as we close off. What do you see as the greatest challenge in the accounting profession right now?
I'd say it revolves really around that previous piece of conversation is, we're headed towards a real deficit of talent in the industry, has been my experience on the ground. I don't run into a lot of people in public accounting who are under 50 years old, and who intend to stay. And so I think that's really going to be the challenge for public accounting as a profession is, how there's only a couple of ways you can deal with a talent shortage. First is automation and technology. Second is trying, and that includes like leveraging new AI technologies and things. And then just niching down your work. So you're doing lower volume, higher value work that you don't need as many labor hours for, but it's really the talent crisis, I think, is really the tough one. And I don't see an easy path forward for how do you solve for that other than, trying to make the profession more attractive. And I think you're going to start to see more things of CPA firms moving away from the traditional models of, you got to be on a 10-year partner track before you get any equity and everybody's working 70 hours a week. That it's just going to have to shift away from that because it just doesn't attract the talent that's needed to actually do the work.
Yeah. Yeah. It's crazy. In the last 6 months, I've seen 3 Wall Street Journal articles about the talent shortage in the industry.
Yeah.
And that's kind of interesting that publication would take notice of the talent shortage. And the last one I read is like, it's getting worse. It's going to get worse before it gets better, which is kind of hard to fathom. Like seems pretty bad now. I talk to practitioners every day and I hear that often. It's just almost impossible to get really good people.
And so I think for a lot of them, you have to shift your mindset from, okay, if my main bottleneck here is going to be talent, they're really the key resource that I need to be focused on, and not as much of a focus on, hey, I'm going to take any client that walks in the door. Because there's more work than any of us can do. Whenever I talk to other tax professionals, it's like, we don't compete. The nice thing about our industry is we don't really compete against each other because there's more work than any of us can do. And so we're all just, okay, how can we help each other out? Because we're all up against this, impossible mountain of work that needs to get done. And so I think for a lot of practitioners, like a lot of these pressure points and things are really issues like in your sales process of like, are you charging enough for your work? Are you saying no to things that aren't worth your time and your staff's time? Yes, the people do need the help, but if you can't be an efficient medium for that, you should say no to that work. It's like, I know some other tax people that I follow talk about, doubling, just double your prices and see what happens. And a lot of times people do that. And it's like, you lose almost nobody. It's like,
we had one of our Accounting Practice Academy members go through and he doubled his prices and he lost 7% of his clients. That's it.
Yep.
And I tell him now, like, if you really want to prune, if you really want to get rid of clients, you're going to have to terminate them because the price is not going to do it. So it really does shift the perspective. Like, you got to build your firm around, how do I build a good culture? How do I make a place that's desirable to work? How do I build that firm? And the cool thing is it's doable. I mean, it's totally doable. It just requires change, and a lot of people aren't willing to change. Which kind of brings me on to next question. Opportunity. What do you think are the biggest opportunities right now in the profession?
I think the beautiful thing about public accounting still is that you can, if you have a mind to do it and you want to do it, you can go out on your own and hang your own shingle very easily. And I think that that's a wonderful opportunity that a lot of people, now that there's so many more resources in terms of, good softwares that you can get to integrate and they all talk to each other. So your tech stack is like easily integratable and you can easily put that together. A lot of people I know who have been afraid to make the jump to go on their own and have their own firm. Now's the time to do it. It's like you have, a completely undersaturated market in terms of services, very stable. And then you really can control your own fate in a way that you can't if you're, in a large firm just trying to get on partner track. And I think too, if you follow a lot of these best business practices, like knowing how to have a good sales process, knowing your client market fit, how are you providing value to clients, and a lot of these firm management practices, you can do very well financially for yourself going out on your own versus being in a bigger firm, as long as you're comfortable with some of those initial risks. But there's so much more support now for this than I think that there was, even in the last 10 years, with all the different programs that are available for people to do training and to be in mastermind groups and these different softwares. I think that's really the big opportunity is, for people who've wanted to go out on their own. Now's an excellent time to do it.
And you can really create a business that works for your life. And that's the thing. People, I think I talk with a lot of older practitioners who are retirement age, because that's what we do in terms of like, those are most of our clients that want to sell. And, they do have an older model where they're working a lot of hours and they're just sort of grinding. But I've
Yeah.
seen a lot of younger firm owners that are building some really amazing firms that give them a tremendous amount of freedom. And it can be done. And it's not all that complicated to do it. You just have to set up the boundaries and be very intentional about what you
Yes.
want. If you're intentional
Yes.
about what you want, you can make it happen. So what's the funniest or most interesting like client story you could share with our audience?
I would say a funny story. Years and years and years ago, I worked with my parents' firm, and they had a specialty with the equine industry. Because my grandfather would used to breed thoroughbred horses, so they just that was their niche, and they loved that as a niche. That's actually another little tidbit of why I was so intrigued with niching, because they were tax professionals, but they were very niched into a specific industry. And it was great. It was wonderful for their practice, and really funny clients in that industry. And so I remember a couple times we would have people who would want to pay their fees with shares of racehorses. So little equity slices in the racehorses. And I just remember my dad being like, I'd rather just write off the bill. Because at least it's not, you don't have to feed it the way you would with like a racehorse. So that I always thought that was funny.
Did he ever regret not betting on one of those horses?
I don't think so, because that's one of those things that I've done enough work in that industry. It's it's like there's a reason why they have special hobby loss rules for the horse industry compared to other people. It's tough business, labor of love.
I bet there are a lot of high net worth people in that
Oh
business.
yeah. There's a lot of hobby loss exposure there, just because of they kick off some really big losses, but it only takes one good horse, and it makes up for everything. So it's an interesting business model.
Yeah. That's very, very interesting. What are you reading right now? What's a good book that you could recommend to our audience?
So I'm currently reading Wooden on Leadership, and he was a UCLA coach, won a bunch of championships, and the book is very cozy and approachable, just talking about the principles of what good leadership looks like, what excellence looks like. And how do you really work with a group of people to get them to be excellent consistently, and what are the foundational building blocks that you have for that? So that's what I'm currently reading, and I really like it. I think it's really good for CPA firms too, just because I think a lot of especially as a partner, you have such a hand in the technical work, but you really have to focus on a lot of these soft things and culture things, and spending time to develop those skills in yourself, especially if you have a strong technical background. But now it's, all of a sudden I'm a people manager. That's a really different experience than, complex tax code analyses. So I think I'm enjoying that one in particular. It's Wooden on Leadership, because it's talks a lot more about those soft skills and culture building, and those sorts of things, which I think are as important as the technical skills now that I'm having to deal with that stuff a lot more.
What I guess what are the things, it sounds like you've built a really good team, and your team seems happy. What I guess what have you done to kind of help with that? What are the things that you think your team enjoys about the firm culture, or what you guys have created to help retain and attract staff? Because that is like such a big thing right now.
Yeah, I think for us, honestly, the way that the firm was built was following a lot of those practice standards of, clients need to use these protocols to work with us, and just a lot of boundaries. And I think too, for the staff, there's a lot of, when I talk to people in the, like quote, sales process, but just when the initial client intake, I'm very sensitive to, is this person going to be troublesome for my staff? Because if I feel like they're going to be a difficult person to deal with, I'm just not going to bring them in as a client, because it's not worth it to me. So those kinds of stances of just, having each other's back and the point of, checking in with them a lot of, how did you like how this went? How would you change this? And then having a lot of processes in place so that there's regularity, it doesn't get pushed to people having to, make all these ad hoc judgment calls on things that can be very stressful. And then just having good, communication systems in place. But I would say probably even more than that is, at least in our firm, we maintain like a very low drama environment. And with the people that we bring in as new team members, there's a lot of rigor that goes into like, how is this person actually going to fit with the rest of this group? What's their personality, type? Are they going to be more, because we have a very analytical group of people that work together, and it's like, is this person an analytical person or not? Are we going to have some issues here on the personality side that just creates for, like a grating internal culture environment? So I'd say probably that's a really big piece of it, is the personality typing and making sure that people are in the right spots for what kind of personality they are. And, that reduces a lot of the drama.
Yeah. No drama. Love it. All right. Well, my last question is, how can best people follow you and connect with you online?
So I have a pretty active LinkedIn. So that's a good spot because I'll post like hot takes on IRS updates. And then too, when I do education programs or things that are going on, I'll post on there. But then if you're, interested in consultation or getting some support, if you're a tax professional, specifically with like the ERC program or things like that, if you visit our website, there's ways to get in touch with us there. You can also sign up to get the different tools that we give out that, have some of these complexities of these programs in a more easily digested format. And so you can go to the website to see those as well.
Yeah. And that website is dominiones.com. Is that correct?
Yep.
And we'll put that, like I said, on the blog post. And, well, Catherine, thank you so much for your time and for your insights. This has been interesting and valuable. And if you're a practitioner that needs an expert in ERC, reach out to Catherine, because she really, they've got this down. So thanks so much, Catherine.
Yeah, thanks for having me. It was a good conversation. I always enjoy getting to talk shop. It's that's one of my favorite things about working with like other tax and accounting professionals, is the so much camaraderie within our industry of just what's working, what's not. It really makes for a great professional, experience and career experience, just having so many other, like-minded people to talk to. So appreciate the time together.
Yeah. Awesome. All right. Thanks for listening to the Accountant's Flight Plan podcast. If you like what you heard today, please follow us so that you can get updates when new episodes are released, and share our podcast with your friends and colleagues. You can also follow Poe Group Advisors on social media. Please visit our website for more information at poegroupadvisors.com.